When investing in stocks, it's not always easy to find growing companies at fairly cheap value, and we're going to try to be covering some of those stocks that I think hit that metric today. So we're going to be comparing to the S&P 500 primarily because that's kind of the standard for the market. We can see First Solar's PE is about 16 compared to the S&P 500, which is sitting at right about 30. We can also see this company over the last 5 years is up 233%. That is a very good performance. S&P 500 is only up about 90. If we zoom out on this company about a decade ago, so early 2015, this stock was at about 49. So it's also performed better than the S&P 500 over that time frame as well, which is only up about 200%, although it doesn't pay a dividend, so you're losing a little bit of that there, but it really doesn't matter that much. And it's not just the growth. I mean, the company itself, in my opinion, is one of the better green energy companies. Hopefully you picked up that First Solar is a solar company. That is what they do. And there's not a lot of solar, in my opinion, there's not a lot of green energy companies that are that good. NextEra Energy is okay as well, although they're primarily dividend. It's just kind of a tough business. It's not always the most efficient. There's money being poured in, but some of it is from subsidies from the government and like tax breaks and stuff. First Solar has gotten some of that. However, I think the company's fundamentals in terms of how much they've grown, what their PE levels are, and then, the industry they're in comparatively, I think it's one of the better stocks out there. But also look at that forward PE of 9. That is very cheap. It's a good stock. It really is a good stock to invest in. So it's relatively cheap. And even if you expect, over the next couple of years, which is probably what people are expecting, there's not going to be a lot of money poured in because there's, whoever's in office. And that can be true. But if the company is successful outside of that, it really shouldn't matter. And in my opinion, solar and green energy is going to continue to grow because even if it's not the most efficient, there's money being poured into it, and there's always going to be people that want to invest in that sort of thing. I'm not talking like investing, but like people that want to use solar and companies that want to use solar and companies that want to sound more green. So I think First Solar is a really good option for a cheap company that is growing. Another one we have is JPMorgan. JPMorgan, I'm trying to cover stocks in different industries, and JPMorgan is in the financial side of things. So over the last 5 years, they're up 74%, which isn't as much as the S&P 500. However, once you factor in that dividend of 2%, they've probably right around matched it. So that's really not a bad performance. If you zoom out, going back to 2015, early 2015, you're up from 60. So once you factor in that dividend and how much they've grown, JPMorgan has done very well. They've outperformed the S&P 500. They're in an industry that, they're cheap, right? They're at 13 and a third PE. That is really cheap compared to the S&P 500. You do have to factor in for financial institutions. They really almost never trade above 20 PE. They just don't. You could look at something like Morgan Stanley, which has been very successful as well. They're sitting at about 20, and that's on the more expensive end. So generally, these large financial institutions trade somewhere between 10 and 20 PE. That's still cheap even for it, but you have to factor in that this is probably never going to be a stock that hits 30 PEs. Also, these financial institutions generally have a ceiling. You could even say if something like with First Solar, everything went perfect, they could grow 100, 200% in a year or two. If like things went really perfect, JP Morgan's probably never going to have that. They're never going to have an NVIDIA run. It's just not really possible with the business they're in. But if you factor that out, this is still a company that is cheap, has performed well over the last 5 years, over the last 10 years. Even if it runs sideways, you're still getting dividends. So that's money that you can put into other stocks if you want to, with that if you're not reinvesting. So I like JP Morgan quite a bit. If we look at the forward PE, just to compare, we are a little bit higher at 14, but still S&P 500 forward PE is 23. So you're still well below it. And generally, with less strict regulation I almost never talk politics in the business, but it just happens to factor in both of these first. Generally, there's an association with lighter regulations, so you can maybe get a little bit more profit out of it, but I don't really think that's a huge factor. But I just like JP Morgan. I like it as diversification. Probably most of you don't own 100 different bank stocks and things like that. So with JP Morgan, I think it's good long-term hold. I think it's going to perform well. Even if it's growing, it's done well over the last couple of years. I think it's a great company. And the last one we're looking at is in the healthcare field, HCA Healthcare. They do hospitals on hospital stuff. So same thing kind of with JP Morgan, where it's going to have a ceiling. This isn't a stock where you're probably going to have a 200-300% year unless things just are miraculous, right? But you could maybe get that in a tech stock or something like for solar if things really went perfect. However, still a company that's performed well, outperformed the S&P 500 up 105%. Maybe let's say it's about even considering the dividend. They're a little bit less than the S&P 500, which is about 1 1/3 dividend. But even then, if we zoom out right since early 2015, this is a stock that's up from 74. So over the last decade, you have outperformed. And you look, that PE, 13.5. If you go to stats, 12.5, a little less than 12.5. So this is a stock. This is a company that has outperformed, has matched over the last 5 years, outperformed on the 10 years, and is, if you go off PE, well, less than half, but forward PE, you're basically still half the value. So, and this is a stock that also isn't near all-time highs. It hit, 417 at one point. It's now down at 300. I think this is a stock I'm personally putting my money into very, very shortly. I like it. I really do. Actually, I'm DCing. I already have a little bit, not a whole lot, but this is a stock. And you think about healthcare, right? It's not the most sexy industry. It really isn't. However, there's always going to be more and more and more money poured into it. We already spend so much money on healthcare. That's not disappearing. We have an aging population in the US. We have an aging global population. So yeah, maybe it's not going to do phenomenal and there's a ceiling to it, but this is still a company that over the long term, if they continue to do what they do, of course, anything can happen with any company. Past results don't say the future, but there's really not a whole lot else you can go on. I mean, there is, but you know what I'm saying. This is a company that it has a track record of succeeding. It's fairly cheap. It's in a fine industry. I assume most of you don't have a bajillion healthcare stocks. If you do, you probably either own this one or aren't looking at another, and that's fine. But probably most of you watching this video invest in a lot of tech stocks. That's cool. I do that as well. This is good diversification into an industry in a stock that's cheap. So even during a recession, it's going to hold value. All of these should relatively, right? Maybe First Solar probably the least because it's tech. But still, so I really like HCA here. I really do. And I really like all these stocks. So I know I've said that quite a bit in this video, but I believe in all these personally, pretty much. I think they're really good, cheap options. They really are. So I appreciate all of you for watching this video. If you enjoyed, appreciate if you liked or subscribe. I do daily stock content on this channel, and I appreciate all of you for watching. I'll catch you next time.